So, welcome back to April 2025 Investor Update for Investing Accelerator. So, my name is Eric, and the mission for Investing Accelerator is to provide a high return to people who wants to speed up their retirement, basically achieve financial independence and retire early. So, for the last couple of months, the market has been quite volatile. So, I'm going to give you an update on the overall market movement, our fundraising effort, some of the things that we tried that didn't work out and what worked, and then also where the AI strategy is at for the moment and the business performance as well. So, let's start with fundraising. So, for the last 2 months, we have successfully raised another 600,000 to expand our business operations. And in total, we have raised 2.3 million in terms of funding. And this will fuel our initial expansion and also sets up a good foundation to build the hedge fund and the mutual fund as well. And our expected launch date is 2026, and that will allow us to help people with retirement accounts in Canada, such as RRSP, TFSA, and also retirement accounts in US, such as IRA as well. Now, in terms of Investing Accelerator education business performance, for the last 2 months, our revenue is between 44,000 to 68,000 a month. So what we're focusing on is optimizing the ad spend because we're training a new Google Ads account, so then we need to build that data up first. And we also got a new software to improve our tracking significantly. So previously, when we're using Google Ads, we get some clicks, and then we're able to track where that lead is coming from, which is accurate around 80 to 90% of the time. So we know when this person comes to our website, heads into the form page, we know which campaign or which ad is causing that conversion. And using this new software and working with Google experts, we're able to increase that accuracy to 90 to 100%. So then this will allow us to optimize a lot faster. And that's what we are busy doing in April. And we're also able to track deeper in the funnel as well. So after someone becomes an email subscriber or a newsletter subscriber, we're able to see when they schedule a call and where that person is coming from. Like if it is especially focused on a certain type of campaign, we're able to optimize on that as well. And for the last couple of weeks, we got a lot of valuable data from this new service, and we're able to decrease our cost per call by 50%, and our cost per lead also by around 50% as well. So to give you a brief idea, so previously, let's say our lead is around $40 to $50 a lead, we're able to decrease that to around $20 to $30 a lead. And this means that there's a significant improvement in terms of profitability, and this will also allow us to reach more people and the right kind of people with the same amount of ad spend. So we maintained our ad spend, and because we're optimizing the ad mix within our different campaigns, we're able to reach more of the right people and get more leads that way, and also more calls. After they go through the lead nurturing phase, meaning that they get to know myself and also my co-founder and what we do and how we can help them, then people will be signing on to the education program, Investing Accelerator. So in terms of investing performance, I'm sure a lot of you are aware that for Q1, Donald Trump basically going back and forth in terms of whether or not tariffs being implemented, trying to strike deals with many countries around the world, including China, and the tariff between US and China is up to 145% as of the moment I'm recording this investor update for you. So overall, the market went down, and during this time, the portfolio or the AI investing strategy also went down as well because it is a net long strategy, meaning that we mainly focus on buying and holding on to the positions that we get in at a discount. So then that performance went down, which we gave up some of the gains we got last year. So what I did in late March, early April, is that I revised the strategy such that we're both long and short the market. Usually, we don't want to be shorting the market because it is only valuable to be shorting the market 1 out of 5 years. And this happens to be that recessionary year where shorting is very valuable and allows you to capture significant gains as well. So that's what we did in April. So we employed a long short strategy, which 50% of the time in April we're long and 50% of the time we're short. Because basically what happened in April was that the market went down the first week and then up the second week and then down the third week and then up the fourth week. So then we're able to capture that movement, a good portion of it, and then the portfolio recovered 26% in April. And as we're speaking, we're heading into the first week of May, and the portfolio is going up as well. So as of the moment, basically, we have recovered most of the losses. We're basically break even, and we're on track to make good gains for the next 2 months as the market is recovering and heading higher. Now, in terms of the market forecast, I expect this market will still be quite volatile, most likely a flat year with a couple of waves in between. So we will be ready to take advantage of any short positions, let's say later this summer when the opportunity arises. So as we're going through the journey of fundraising, I also want to share a couple of lessons on what worked and what didn't work for us. Late last year, we're looking at using an investment banker to help us connect to investors around the world. And they have sent out over 60,000 emails using automated services, but the response rate was very low. And that is really a combination of the change in administration, and a lot of investors are basically waiting to see when is a good time to invest. But also, it kind of proves that cold email campaigns aren't exactly the best approach to attract investors. And this will become a problem we need to solve in the future anyways, because when we set up the investment management company, we'll also need to reach out to people to manage their, let's say, RRSP or TFSA accounts as well. So it's good that we have proven the cold email campaigns don't work very well. And then I'm also simultaneously running a cold LinkedIn campaign as well. So what we do is we reach out to high net worth individuals across US and Canada, specifically, let's say in the tech sector, and see if they need help to get a higher return for retirement and investing as well. So it turns out the response rate is slightly better here. And I did hop on a couple of calls with investors, but then the quality of leads is not exactly where I want to be. So most of the investors we gathered are people who already know me or have worked with me before. So then we are able to raise the initial seed 2.4 million so far. And what we're going to do next is to build a custom funnel, basically to nurture future investors into our business or as a client for our hedge fund and mutual fund. So far, that has been the best approach, predictable in terms of cost, and also reaching exactly the kind of people we want. So that's what we're going to be working on in the next 1 to 2 months. And then later on, when we set up the investment management company officially, then this funnel will also be ready to go and we can scale it as well. So that is pretty much it for this month's investor update. And we're very excited for May because my forecast for May is generally bullish. And then June will likely be a turning point, and July will be bearish, which we will be ready to short the market if needed. And this will allow us to make money both sides. And then we should have overall a positive year for 2025 as well. So I'll keep you posted on the next investor update.